I am Zane Tomkowski, and for my MBA 500 final project, I'll be evaluating the external and internal influences of mortgage loan officers. So, mortgage loan officers, their job. The first job that I would like to describe that I found in an article online is described as a loan officer at a bank or credit union that is typically just a smiling face of the institution. The officer's job is to accept an application that the borrower has filled out and then hand it off to the underwriting department. Now, when you hear this, it's a little, uneasy trying to understand this. But our job at First Commonwealth is to gather information, to keep the file together, and then ultimately send it to the underwriter. And it is a lot more dense than what it is led on to. So the process of obtaining a loan, you can obviously get pre-qualified or apply online, or if you would rather meet face to face, it honestly is customer preference. But usually, realtors send customers to us, and we have to determine it by credit score, their DTI, and such that I later outlined in the legal slide. The checklist. So when I begin an application or a pre-qualification with a customer, I ask a series of questions. They're personal questions, but they all are very important to the process of obtaining a loan. To start with, you ask for the name, date of birth, social security. You also ask for verification of employment, their residence history, and then obviously a means of communication. And then in addition to all of those items, you also want to ask what kind of fees and money they have saved for down payment and closing costs, which will determine which type of loans that would be the most cost effective and the best suited for an individual. So these types of loans that I'm going to outline start with a fixed rate loan. A fixed rate, I mean, it's pretty self-explanatory. It's just a constant principal and interest throughout the life of the payment. So, for example, a 30 years and amortization schedule will have the same principal and interest throughout that whole time. An adjustable rate mortgage, which is an ARM. Now, these are more common with lot loans or somebody that is coming into money in a couple of years. So this loan will move up and down depending on the period that it was assigned to. So 5 years, 3 years are usually most common, and 7 years as well. And these are for people that are just seeking the lowest interest rate and just trying to find a way to pay this off as soon as possible. Construction loan. This is pretty common amongst most banks, but with our bank, I think what we can kind of have an upper hand on the opponents is this construction loan only is 5% minimum down payment, which is not very common amongst other banks. An FHA loan. FHA loan is a government loan, and this is basically helping. It's a 3.5% down payment and closing costs. You have to have that minimum investment. But with this, they can only lend up to $271,000, and you can't have any relationship with the seller and such. But with these are great loans. They're cheap. They allow people to get into houses for a low cost with the seller assist of up to 6%. And I'll touch on that right now. Seller assist is just money that the seller sets aside for the buyers to help them with their closing costs, and that ultimately helps them get into the houses. PHFA, or the PA Housing Finance Agency. So this was set up to help first-time home buyers with their closing costs. There are a variety of different loans. They range from conventional to FHA to USDA to pretty much everything. And they're all fixed rate mortgages, but they provide assistance with closing costs and down payments. Now, however, there are some income limits with these. VA loans. So this is basically a loan for any veteran out there. They're great loans. They help with getting a veteran into a house basically for free, because most of the time these veterans aren't required to pay for anything. I outlined this GD 214 because it's very important. Without this, a veteran cannot get a house. This is like their paperwork that shows that that has proof that they were in the military. and then a USDA, which is the Rural Housing Associate. And with this, there's certain income limits. I mean, I think it's 78,200 for one person, and then it goes up slightly for the amount of people in the household. But with these, there's only certain locations that can provide these loans, and the way that we figure these out are by looking online and kind of determining from the USDA website if they're available. Now, this USDA, this VA, and this FHA are all government loans, so they're very regulated. There's a lot of restriction on these, and the government sets the rates, nationwide for these. PHFA, I'm just going to outline these, and PHFA is mainly to help with closing costs. There are income limits. And then we have a construction loan, which, like I said, I abbreviated, it's 5% down. And we haven't gone into modular. We're mainly in stick built, which means they are built on site and not delivered by a truck or via tractor trailer. ARMs are for lots. And then these fixed rate loans are basically FHA, PHFA, VA, and USDA. So the external environment factors. Marketing. Marketing is very important in our line of business. In order to get your name out and your products out to realtors, to anybody in your company, as I highlighted, your internal bank colleagues. So with this, you're able to create some exposure to some of the products we have. The realtors in Johnstown drive the mortgage loan department. So basically, if you have a good realtor connection, you will be successful in our business. So I outlined something on FC banking, and this is what you would count on your real estate agent for. They're going to preview the homes, so they'll have access to the homes for you. They're going to find a home that suits your need, like the amount, the purchase price, monthly payment, and such. And then they're always going to ask for a pre-qualification letter. And without this, most people will not be able to see a house. The products that we offer, we try to market most of our products. We offer a medical professional program, which has no PMI. PMI is private mortgage insurance, and it just basically ensures that the bank gets its first 20% of the money, 20% of the loan in case of a foreclosure. And then, as I stated, we like to set aside internal bank colleagues and have little huddles in the morning. And with these, we evaluate them and try to see how much knowledge they have about us, and just continue trying to market, because they're the faces of our bank. And usually they're the ones talking to the customer, and as long as they're asking the right questions, it could help us out dramatically. The other environmental factor that I'm going to point out is the technological. So online accessibility. If you visit fcbanking.com and go under mortgages and apply now, you can fill out your whole online application, and you don't even have to talk to anybody. Basically, they do our job for us, and they outline every question that needs to be filled out. The other online accessibility that we have is this card tap. And with this card tap, it's a business card online, and it can be downloaded as an app, and it serves as a great way to find interest rates and approximate closing costs of a house and such, and monthly payments. In addition to this, that I don't have on the outline, we have this e-consent, which is our mobile banking, and with this you can e-sign your whole application package, and it saves time, and it kind of lets the borrower view everything from home rather than having to rely on the mortgage loan officer in the office. And another thing that dramatically influences mortgage loan officers is cell phone availability. So basically, with this job, you're on call 24/7. No matter what, you always have to be able to answer your phone. Competition. So with rates, every person that I talk to is always asking about interest rates, and sometimes they vary. Like for the government loans, for example, they are usually set by the government, so they're kind of standard throughout every bank or every mortgage broker. But with this, if banks are a little more, I don't know how to say this, are more conservative, they won't match interest rates. Whereas if they're a little more risky, they'll be willing to lose a profit on you and give you the best interest rate possible. Products. This is another competition seeking. Everybody is honestly looking for the best product possible to get into a house as cheap as possible. With us, we offer the First Front Door Grant, and this product allows people to get in the house for as much as $1,700 because it's a 3-to-1 match, and it allows customers to get into their dream home for cheap. I also think the customer service amongst bank is extremely influencing. So I think a customer will decide on if they like a loan officer at one bank over another bank solely because it's a friendly hand, and they'll be able to call back. Because in my experience, people that don't call the customers back do not fare well in our profession. So legal aspects. So DTI. So this is debt to income ratios. As I outlined in several slides before, this VA loan, you have to have a specific DTI. You can't have over 50. USDA, there's a 29 for your house, so you can't have more than 29% of your income, of your gross income towards that house, as well as your back end of your total income at 43%. PHFA, these are usually conventional, so they're 45 to 50% DTI, as well as an ARM that usually depends on if it's a conventional or a government loan. Government regulation. So with this, there's several regulations. There's a whole application package that borrowers often have to fill out, and it depends on how, you can't discriminate against age, race, gender, and these governments set aside certain restrictions amongst these programs. For example, a VA loan has to have a pest inspection. There's just certain aspects of these government loans that you have to follow. Like a USDA cannot have chip paint on the side of the house and has to be well kept. FHA has to have railings installed to keep the utmost safety regulations. So the internal factors. So our sales team. The sales team consists of mortgage loan officers, essentially. And this is the friendly face that I described earlier. And with these mortgage loan officers, they are often starting the application process, gathering all the information, providing the information to the fulfillment side, and then the fulfillment side will be able to close the loan with the mortgage loan officers still gathering information that the underwriter will ask for. Management roles. So there's the management of the sales team often goes to battle with the fulfillment team because the fulfillment team wants to be able to provide the best program and stick straight to the guidelines, whereas the sales team is looking out for the best interest of the customer. Loan processors in our company are responsible for providing or ordering the appraisal, ordering tax transcripts is another way to identify income, and often ordering the title work. Our disclosing team is the team that usually sends out the application package for the borrowers to note. Underwriters review the whole loan, and they are the ones responsible for asking for more information and sticking straight to the guidelines, and they abide by all the regulations that the government and conventional loans set aside. Freddie and Mac, Fannie Mac both determine what the underwriters will ask for in a loan. Loan closers often just balance the transaction with the title company who's responsible for closing. And customers. So customers, communication with the customers, if they're lazy, this will not be obtained in 30 to 45 days of the normal mortgage loan process. Organizational skills, that's hand in hand. So this determines if a loan officer will be able to close a loan on time. Education. Sometimes education with technical skills are hand in hand, and if they aren't able to access the internet, it's very difficult for a mortgage loan officer to hit the settlement date the realtor instills, and this is often problematic. And then employees. There's a strict communication management interaction, and you can basically determine if this file is going well by the communication amongst employees.